Oh, hello there. Hello, everybody. Welcome back again to my channel. If you think again, if my video is helping you, can you please like or please subscribe to my channel or make a comment, and I would really appreciate that. I hope you do good, you're doing well, and you're fantastic. For today's video, we're going to talk about a little bit different. When you're here in the United States, you need to do this. So it is very important you have to follow this topic that I'm going to share to you. Without further ado, let's start the show. Now on this video, we're going to talk about the credit and the credit score, what you need to know and what you need to do and understand the following. Now in the United States, it's very important to have credit, like your score should be high, like good or excellent. So a credit or loan is important because you cannot buy just easily with a car, you cannot just buy easily with a house, or you cannot open or inquire for utility bills without your good credit that is in good standing. So everywhere here they need a credit. So your credit, how you're gonna get a good credit score, and let's start doing that. Okay, so credit is very important because you want to buy. As you can see, you had the power to buy. That's why that's the buying power to loan. Everywhere, everybody here, if you want to have a good house, car, if you want to head open out a business, or want to head loan money, you had to have a good credit score. Okay, now that's why you have to do the following these things. Remember, if you're going to buy something like the car, like the house, open up a business, inquire for utility bills, you had to have a good credit score. And how we're gonna do that? Okay, now credit score affects the buying power. So the higher your credit score, the lower the interest. So it means the lower they're going to pay. Now if your score is poor, so therefore the interest will get higher, and the more contribution or money that you're going to pay. So that is inversely proportional. So that's why you had to build a good credit in order to purchase a certain thing here in the United States. And basically those are necessities like car, utility bills, and then a credit card. So if you want to open up a good credit card, you have to have a good credit score. So that's how it is work. Okay, now let's talk about a credit score. Now credit score could be like this. It's either like very poor, fair, good, and then excellent. So as you can see, that's the score that you're going to get if you are doing well or if you're not doing good. Okay, now the credit, that's about the credit score. Then the next would be the credit factors. So what we need to know about the credit factors. Now for this, the higher credit score, it will affect with the following things. Okay, these are the credit factors that will affect your credit score. Okay, now let's start first the payment history. Now the payment history is that you're consistent. So before the due you pay it, then you're good. So if you not consistent and you have late payments, of course, that would fall on low score, because that will fall on the something like derogatory remarks. So it will also affect that you are delinquent. Are you delinquent? Of course, you're not gonna do that. Okay, then next is the credit used. Okay, they're talking about, of course, when you want to shop, swipe here, swipe that. So don't max out your credit card. So use it like a minimum, or if you swipe it like big time, you have to pay it. You have to pay that, so in order not affect your credit score, especially when you want to buy a car, or when you want to buy a house. That is important. Okay, and then the age of credit history. So how long did you open? That's why you have to work on your credit score. It means that from the moment that you open your credit card, you have to maintain that till the end of time. So it's better to do that, because it affects. Don't open open a credit card all the time, because the shorter the age of history of your credit will affect too. But as long as it is long, I mean like old one, so that's better because you keep it. So that's for the age of credit history. Then the letter D is derogatory remarks. That's what I'm talking about. If you're a delinquent, or you're not paying the credit card on time and you forget it, you're gonna be in a problem affecting your credit score. So that's why what I do now, I learned my mistakes before. So I list down the due date, what credit card, what bills I need to pay. So list down or put it on your ref or on your phone, or something that you could remind you. So that's something that you could do. List down all your bills, your payments, or your dues. Okay, and then the total account. So how many credit cards or account that you're going to open. So how many credit cards do you have? It affects too, like loan, car, house, bills, and then your credit card. So it affects your score. So it means like the more credit card you have, it gets a high score a little bit, but there is a danger for that, because you're gonna swipe and swipe and swipe. So that's why mind you, be careful on that. Okay, as much as possible, I recommend like 3 or 4 credit cards is good, or 3 credit card is good. Okay, because you're gonna loan for a car, you're going to loan for a house, or other important matters that you're going to pursue with your credit. So that's why you have to be careful with that. And inquiries. So under this is a soft and hard inquiries. Now the difference between the soft inquiries, like when you open when you ask to open an account for water bill or a credit card that is not a big company. But for hard inquiries, it includes your car, major credit cards, loan for the house. So those are big time hard inquiries. So you have to be careful with that, or you want to have a borrow loan money. So those are example of hard inquiries, because before the lender approve that, they will pull up your credit score. So if your credit score is high, and then they will lend you, because they know that this person is capable of paying. So if they pull up your score is poor, they're not gonna lend you, because you are delinquent, you are poor, so you are unable or incapable of paying. So that's how it affects your buying power. Okay, and I recommend also that you open an account like Credit Karma, because Credit Karma is a app in a phone, so you could download that and then create an account, so you would see your credit score there. There are three like a credit bureau called Experian. What is that? Experian. We also had TransUnion and Equifax. So those are the three credit bureau that they will report if you are delinquent, or if you had a backdraft or you did not pay. They will report and it will affect your credit score. So that's how it works here. So open a Credit Karma account also helps you to find other credit cards that they recommend for your credit score. So you would see approximately your credit score there, how high or how low it is. So at least you're gonna have an idea on how your credit score is. That's for the Credit Karma. So I recommend that. So you try to open that so you will track your credit score. Okay, then last, what are my recommendations for you to be able to make a good standing of your credit score? I suggest you open credit cards, like 3 or 4 credit cards. So they have plenty of credit cards that will invite you online and then paper. If you're doing good with your payment, they will send invitation, so you would choose. So that's why if your credit score is good, they will give you more benefits. And then also do not max out or use or utilize of your credit card, because the interest is also high, so you end up paying a lot. So I learned also from that. So now when I use the credit card, then payday I pay all. Okay, so don't forget. I know in the beginning it will be hard because if you open an account, they only give you like $300 or $500 for account. So it's little here, because when you go groceries, buy gas, go here, pay utility bills and everything. So also that's why it's limited time, a limited amount of money on your credit card. But as time goes, so like after 6 months, they will increase it into 700, 500, 1,000. Then as long as the age of credit gets older, then it will get higher. Okay, another suggestion that I could recommend to you is when you use it, pay it. Because the utilization will affect your score as well. And then also do not use your credit card on paying the bills, like the utility bills like internet, water and electricity. Use your debit card. So it's much better, because credit card would have a higher percentage, while debit card, of course, none. Only use your credit card when in emergency, like groceries that has cashback, like when you purchase gas, groceries or plane tickets, so you get cashback. So at least you're going to use that. And mind you, if you are financially stable and you are good on money, you're gonna do well here in the United States. Of course, I know in the beginning it will be hard, but 1, 2, or 3 years is a building phase. But after that, you're free from your agency, and then you can go work, and you get paid much higher as compared to their offer, and you could work more time or overtime hours, and then at the end you get more money that you can bring home and enjoy yourself. So that's why I hope you learned something from this, and God bless us all people. And don't forget to like, comment, and please subscribe to my channel. God bless you, and God bless us all people who are watching this video.